Good morning, traders. Today is the 17th of February. My name is Neville Hornsey, market analyst YouTrading, and today I'll be discussing swing highs and swing lows. First of all, just want to define what a swing high and a swing low is and how we use it. So a swing high and a swing low appears at the top and bottom of a trading range, and it's a three candle pattern. So we have a high here, 116.347. To the left of that, we've got a lower high, and to the right of that, we've got a lower high. Now, sometimes we'll have a small candle like this one, which is a Sunday candle, and I disregard Sunday candles. I just use Friday and Monday. And if Sunday is part of Monday, then we just sort of combine that together. So here we've got a swing low. So we've got the 113.462. It's got the lowest low here on the Monday. Then on the Friday candle, it's got a higher low. And then on the Tuesday candle, it's got a higher low. So this candle here being Monday, 113.462 is the lowest low. This is the swing low. So this trading range goes from 116.347 all the way down to 113.462. And if I was to put another price marker here, you can see that this swing high is lower than this one. So we're still within this trading range. So we can put like a high, maybe put that in red and make it so you can see it. And then a green down here. So generally when I'm talking about trading, I'm looking to break out of a trading range, looking for a trading range to extend to the upside or come down to the lower end, or we say it's just trading halfway back into a trading range. So currently this price action is trading within here. However, as you can see, we've got this candle here. So this is 116.332. To the right of it, it has a lower high, and to the left of it, it has a lower high. So this potentially could then become a smaller trading range, so an internal trading range compared to this one. Anything you do on technical analysis needs to sort of transfer to all time frames. So if we go down to a 30-minute time frame, we can see here that I can just drag that across there. You know, we've got a smaller time frame and an internal, well, lots of internal trading ranges. So if I put a low there and just see if this one's lower. So from 116.332 down to 115.005 could be another trading range. And you can see that this swing low is defined by this green candle's low. To the left of it, it's got a higher low. To the right of it, it's got a higher low. Same here. This 116.332 on the 30-minute time frame has a higher high here on this green candle. To the left of it, it has a lower high. To the right of it, it has a lower high. So that is three candle chart pattern, swing high, and together they make a trading range. All right, so if you look right, so this trading on the right-hand side of the edge of the chart, and how are we going to use this? Well, if we get a break of a swing low, then that's new information. We've broken out of this internal range here. We can start to look for extensions to the downside, or we can look for liquidity, which generally goes underneath a swing low, because that's where we're told to put our stop. So if you were trading higher up to 116.332, you may have trailed your stop under these swing lows here. So you could have entered somewhere around here, around the 114.6. As you saw a big push up, you know, and then a retracement, you might have decided to put your stop there just to sort of lock in some profits and to make sure, you know, you get the maximum out of this trade. As you didn't get stopped out, you'd have seen another break of a high, a big retracement, and you might have put your stop there, and so on. You would have trailed your stop up these swing lows. So as markets come back down, they like to test all of these areas, look for liquidity that's underneath there, and then, you know, depending on the fundamentals and the sort of overall higher time frame trend, whether or not they grab the liquidity and go back the opposite way, or if they just use that as an accelerator to the downside. So what we look for at the moment, well, if we go to the sentiment indicator, scroll down to the dollar yen. 79% of traders on this platform are trying to go short. So we're looking for areas to go long. Like I said, this swing low and this swing low have been taken with this big down candle. So at the moment, those bears that we just saw in the sentiment indicator are sort of feeling good about themselves. If we go back to a daily candle, we're in an uptrend. We've got higher highs, higher lows. So if we were to break a significant low, being say this one here, then that would be a change in market structure. So we'd have a lower low, and then we'd have a lower high potentially here. When we look to swing lows and we look for trading opportunities, when we're coming back down, like I said, we're taking out the lows of these candles here. If you look to where the swing low occurred, we've got this low here, which makes the swing low, but then we've also got this high. Generally, when we have a breakout of the fourth candle, so once the swing low's confirmed, we've got a 3 candle chart pattern. On the fourth candle, they generally come back down and test somewhere either at or below the high of the sort of middle candle. Here you can see we've got the swing high, came down, the fourth candle went back into this green candle. So it didn't stop at the low of this candle, it actually went into the body of this candle. Got another swing high here. If we go to the low of that candle, so we've got 3 candle chart pattern. The fourth candle broke below this swing low here, this candle low here, sorry. And it's sort of trading back inside. That's where we are at the moment. So we know that this swing high has had its internal sort of tested. We're thinking we're going to get a lower low today, and we're looking for somewhere to go long from. Now, all of these swing lows have had their sort of main candle, if you like, tested. So potentially, we're hoping that there's buyers somewhere in here, or we may be looking for, an even lower low. So somewhere where it hasn't been tested. So if we come down here, other candles here, we've got a rally, a base, and a rally. Where this range breaks to the upside, you've got this impulsive move. This high of the candle hasn't been tested. Neither is this one. So potentially, if this was to be a change in trend, we could be coming all the way back down here. But whilst we've got retail traders trying to go short, I think they're going to get stopped out. So I think where we see this 116.347 and 116.332, that's pretty much equal highs. So I think they've put their stops up there, and I'm looking for a chart pattern, which would be like a 3 candle chart pattern. So we'll have a drop down, then we'll have a lower low, and then the third candle would complete the swing low, and then we would start to look for going long then. But at the moment, we can't. If you want to intraday trade this, using this similar sort of concept, like I said, this low has been taken. If we look to the left, we had this drop base rally. From the rally, we've got this higher the candle here. That's where they've tested. We're now waiting to see if they take out this double bottom here. If they take that liquidity from underneath the 115, then we'll be looking to the left here. Again, swing low, third candle, come back down, test the middle of that on this candle. So there's no liquidity there. So then we start looking down here, and there's plenty to sort of choose from. So this is the swing low. And then here is the first non-tested candle high. So potentially, if I just mark this one in blue or something. So potentially that's where we could get an acceleration down to intraday before this swing low on the daily chart happens. So we go back to the daily chart just to sort of check our sort of workings. So I just said that blue line might be where we get a push down to, because there is a lot of bearish sentiment, obviously, for the dollar yen at the moment. If we come down here, then see a swing low form. Once we see this pattern where the swing low is confirmed and then the fourth candle comes down, tests the high and then rejects it, that's where I'll be looking to get long. And then I'll be targeting up here, this double top. Okay, that's how I trade swing lows and swing highs. I'll speak to you again tomorrow.